Good turnaround Tuesday, everybody. How's everyone doing? Who's stir crazy? Give me a why. Better adjust. Me too, buddy. Could go till June. You know, have you noticed how it's a drip, drip, drip as they get tighter and tighter? Right? Stay at home, then enforcing it. Are you okay, Forex gal? So it's turnaround Tuesday, and my candidate is S&Ps. Now it has a chance to turn good. Blake showed a chart that this could be head and shoulders if we clear this up here, and that would measure up towards 2,900 or not or so, which is viable because the wedge is all the way up here, and maybe eventually we work our way up there. I'm just thinking, we just took out last week's high by a little bit. Let me show the weekly. There's your monthly. There's the weekly. Okay, so the high this week at 46.5, which took out last week's high of 45.90, so less than one handle that took out the high. And the 2-week off numbers all the way down here at 2,300. So who knows? It's early in the week, and in this environment, anything can happen. That's be 2,300. And the other possibility I'm considering, how many times have you seen formations like this? Okay, yeah. Everyone probably saw that on my screen. It's the last day, guys, to become a member at these prices. Steve wanted me to remind you guys. It's a volatility offer. So this is our version of the VIX, 40% off. And remember, we were talking about the VIX at 14. VIX, VIX, VIX. And back to the S&Ps, how many times have you seen formations where you get a breakout of a channel, of a wedge, and it comes all the way back down to retest it? In this case, we'd be making a new low. This wedge line over the course of next days can come in ballpark around 2,100. And I know Steve's a chimp. Oh, a chump, Ziggy. Okay. A lot of people had 2,100 targets. So, you can't completely rule it out, but your first important level is yesterday's low. That's 24.57, which is where this moving average comes in, 24.54. And of course, this horizontal line at 2,400 that held and held and held. And then if you just do a quick arithmetic count, say 2,400 and 640 is 240, that would give you 160, which is also a retest. So, when you have this kind of sell-off like this, for there to be a retest or, even a higher low or at least some fib retracement of this is possible. And then perhaps after that, we get another big rally. But this is my choice. 1987 to 2027. Okay, that's in the ballpark. Well, if you go the weekly, a lot of people that stop, paying attention to the megaphone formation. But I do remember a face session saying we were back inside of it, and that triggered the formation again. And this is coming in under 2000, 1973. So close to your number, Sean, all the way down here. I don't think I'd be looking for that right now, but that's my call. When it comes to the dollar, there could be some more left in the dollar. maybe up to here before we get another pullback. And this makes sense with if the S&Ps are pulling back, the dollar gets a bid, but the dollar doesn't blow off to new highs. It rallies up to here, and then we get another pullback. I've seen counts where you could go up to say 101 and then down to 94 and then have the big blow off in the dollar. So just trade the dollar, okay? Don't just date it. Date your currency pairs. Don't marry them. Okay, so maybe that would take euro back down here before we get another rally up here to 61.8. Oil's trying to pop. There is divergence here in the oil, but I can't buy it, especially with if I'm going to be right about here, and it continues to erode. So hello, Shahab, and that's about all I have to say for now. We have a great guest. It's going to be Peter from MCM right here. Excellent technician. I follow some of his stuff through some of my mentees that follow him and keep me informed with what he's thinking and doing. He's excellent. Stick around for him. He's kind of like a musician of the market. He plays piano with the S&Ps. And with that, let's see what's on Blake's mind this morning. Blake, we're going to be inside till June, it looks like now, don't you think?
Oh, I mean, that's you know,
huh?
That's a minimum estimate if you ask me.
Really, June?
Yeah,
Wow.
I mean, I don't foresee um us leaving our house for probably the entire summer, at least, I
Wow.
mean, minus the random,
Groceries.
groceries from here, from time to time, which, I had to make a trip to my local Costco yesterday. Hold on real quick.
Was it crowded, bro?
Yeah. So our governor,
Yeah, he hasn't had a shutdown in the state, has he? A
he
stay at home yet?
no, he issued a stay at home, but
Kind.
if you read through like his declaration, nothing changed. All he did was create panic. Soon as he said that, there's a stay at home as of today, it's actually today at 5 p.m. Yeah, today at 5 p.m. Um, but if you read through it, nothing's changed, nothing at all. But I was like, crap. So I was actually just wrapping up my analysis when I found out on social media that this was happening, and my wife had alerted me actually, and so I ran to Costco. I happened to just walk right in. I mean, there was a couple people in front of me. I mean, they kind of single file line you in,
Yeah.
and I ran through, grabbed a bunch of stuff, and after I paid, I was on my way out, and there was a line of maybe 200 people sitting outside. So
Oh, okay, because they've got the news later.
they got the news, like, I literally
Mm.
wrapped up my analysis, pushed it for ForexAnalytix. So if you got all the updates yesterday evening, I literally pushed the updates to the platform, and then I ran out the door. And yeah, it's mayhem. And I mean, it was, because he created he created
A panic.
a bunch of panic. And then but like I said, nothing's changed. It's not like stores are going to stay closed or anything like that. Essential businesses are going to stay open.
Do you think
Nothing's
they're
changed.
going to, a few states, like I heard there's a soft martial law in Orange County because it's only the police that are enforcing it. But don't you think they're going to have to call out the National Guard to really have a nation, to really shut it down? It seems
Yeah,
like
yeah.
they're doing it drip, drip, drip. Just do it already.
Yeah, exactly. Well, here's the issue. And I'm going to I'll talk a little bit about this, then I'll get into the charts
All right.
because I'll get into the
Okay.
markets. Um, the United States is still behind the curve. For those of you that don't
Yeah.
live here, firmly believe it. If you talk to Steve and Stelios, which they can tell you, and you got to fill out something online if you're going to go outside, Italy does the same thing. You have to carry this piece of paper with you. So if you get stopped by police enforcement, they can say, all right, do you have your paper, or do you fill out, or you fill out something online. Like in Greece, you text them, and then they give you authorization to go do the things that you need to do. In the United States, especially even the hard hit areas like New York or California or Washington, that we should be implementing something like that. I actually believe we should be implementing that, nationwide, but we're not. And we probably will eventually get there. Unfortunately, it's going to be once it's too late. And that's my biggest fear at this point. So that's why, you look at the curve in the United States and why things are not flattening and probably won't. And it's sad to say. I mean, it is. Anyway, let's talk about the charts. So, the S&P, I'm just want to bring up, we have this big inverted head and shoulder pattern. And as I think you were just talking about it, Dale, if I'm not mistaken. If it breaks out, I mean, we have a big move, upside move. Now, I don't think this is happening unless we get a nice solid break above 2,700, frankly. We have to break above 2,700 in order for that to play out. Can something like this happen? You bet. Sorry, I didn't mean to yawn on you guys, but in order for this to happen, we would have to see, in my opinion, some sort of
good news on this,
good news on the virus front. Like there is a vaccination that is going to be released to the public in a few months.
That's not happening.
I don't think it's going to happen either. But but this is all technically still possible. So just keep that in mind. But while we're below the 38% retracement, I don't expect us to even have much of a recovery. Even if we do, we might get towards the 50% retracement, which would be right here, right towards these levels, 2,800. I think it's possible, but I'm not counting on it as of yet. Now, remember,
what would negate the right shoulder, Blake? Back under 2466?
Yes, correct. Back below. Well, maybe below 2,400. I think.
Okay, below, 24 is big.
Yeah, probably like below here would negate it.
Thank you.
So now let's talk about the other dynamic that's happening in the market. It is end of month, end of quarter. All right. So let's say you have. I'm going to use just round numbers just to make it real simple. Let's say you had $1 billion worth of stocks. You're a hedge fund, $1 billion worth of stocks, and you had your $1 billion is now worth, let's just call it 900 million. All right. So you lost 100 million. Now you have to rebalance your portfolio back into dollars. So that's why there's expected dollar demand into the FX market, because the equity market losses were so high that they expect that the dollar demand for end of month is going to be high. So if you look at the dollar index is pushing up against 100. My opinion is if we break above 100, we're probably going to squeeze towards 100.60 or 101 in the dollar index. So think about that going into the end of the month, end of quarter today. And a lot of those flows need to be pushed out today because of this big rebalancing. And it's going to be a big one because there has been so many losses in equities. Also, a lot of these pension fund rebalancing, you saw in California, you might have seen yesterday, California is actually thinking about pushing off some of their rebalancing because, obviously it's so big that California tends to be one of the leaders as far as pension funds go. And so a lot of other pensions follow their lead. They expected a huge rebalancing in equities, and that's why this big buying has come through in the last week. Like I said yesterday, I don't know if we're going to get that huge rebalancing today because I think a lot of it has been done over the course of the last couple of days. And as I had mentioned to you guys before, that it was so well known. We were talking about it early last week. Now that like CNBC is running a big story on it for today, I think people are trying to buy into this going into quarter end, month end today, trying to get long equities, and they're finding themselves going, oh man, I thought we were supposed to get some big buying in, coming in today. But we've been talking about it since last week, and so I think a lot of those flows have been done, but I don't think the dollar portion of it has been done. So that's why you have to be a little careful with the dollar, and that's why you saw some of these spikes in Asian trade. I mean, look at the Aussie last night. This is the Aussie last night. During one of the Tokyo fixes, you saw this big move down in the Aussie, and it bounced back as soon as that ridiculous China GDP or PMI number came out.
That was hilarious, wasn't it?
What, Steve?
The PMI, the US.
Yeah, it was ridiculous.
Guys, sorry to interrupt. I'm going to talk about that later. It wasn't actually a big deal.
I won't rain on your parade. So hold on real quick. Let me just talk about some of these fixings. But you see, like the dollar yen, big spike up from 108 basically to 108.70. And depending on where the dollar buying comes through, a lot of people expect it to come through, a lot of it through the euro. So the euro might, make a move down to 109. The cable is another culprit that, could trade back. You can see how that a lot of the fixing last night, you could see the pound trade back, down towards, 122.50 maybe. But the question is, where does it start from? I mean, we could do one of these. Today, before the fixings actually take hold. So I think if you're selling dollars this morning, you have to be really careful. I personally, I'm looking at the dollar yen, and I actually want to be short the dollar yen, but I don't want to be short yet. And I don't want to be short. I probably will realistically try to be short tomorrow. What I'm looking for in the dollar yen is I'm looking for a move back up towards like this 109.25, somewhere up here, to start looking to be on the short side, somewhere around here, the 50% to 618 retracement. So what I'm hoping is you're going to see this dollar demand come through and the dollar yen spike up to 109.50, and then I'm going to look to sell it somewhere up there. That's kind of what I'm thinking, because like I said, I actually want to be short the dollar yen. I just don't want to do it right at this, very moment in time. I think the dollar demand today could be something quite spectacular because of how equities have moved over the course of the last, month. You could see some serious dollar buying coming in, and that's why you have to be really careful if you are out there selling dollars today. If you see anything really wild come through the market, if let's say you're a dollar bear, be a dollar bear, that's fine. But let the flows make their way through the market first before you find a strategic place to be on the short side of the dollar, if that's the way you want to play it. All right, because trying to establish those positions right now might get you into trouble. Maybe not, but I'm more concerned about you as a trader at home and your safety, of getting hurt in some of these moves. I do want to point out a couple of patterns and set up. If you look at the Aussie dollar is breaking lower out of an ascending wedge. So a break below here around the 60 level, which we're only 20 some odd pips away. I think this could, bring some downside with the Aussie. You look at the Kiwi's breaking out of a wedge as well. So the dollar is kind of already showing you what it wants to do with some of these currencies. You got the US dollar Canadian, which I'm a little irritated that I didn't buy it last night. I was wanting to buy the dollar Canadian. I was hoping for a dip down to 141. Never got it, and it's just kind of grinded higher. But you look at the dollar Canadian. I mean, we're nearing the 618. I know a couple of people in our chat room were thinking, hey, looking to short the dollar Canadian. Fine, you can try it. This is probably your best risk reward if you want to be short here. But the fact is if it breaks through here, you don't want to be it. And I'll tell you, I went, like I said, I went to Costco yesterday for two reasons. I went with one vehicle, pick up a bunch of food. I went and I filled up my car last night because I had a car without gas, and I'm like, just in case we need to go somewhere, I want to make sure that both vehicles are gassed up. I paid $2.15 for premium gas yesterday, which I don't ever. The last time I paid for gas that was that cheap was when crude went from 150 down to 20. And Skip in Oklahoma in our chat room, he said that gas prices for regular gas was 95 cents a gallon. We were at $1.95 last night. That is just crazy. So with crude oil, the demand destruction in crude, and I know crude's up today, but you got to be careful with like the Canadian and the peso's looking a little perky here. The dollar max. And, you guys I guess the point I'm trying to make here is just be really careful in the month and quarter end with these moves that we're seeing. Just, try to err on the try not to overexpose yourself and try to be very careful with the dollar, because there could be some, wild dollar moves today, in my opinion. Okay. All right. So Steve or Stelios, you were talking about last night. What were you going to say about last night about those PMIs?
Yes, I was going to talk about BMIs, because when I first saw the number, I was like, man, that can't be right. It can't be that they've recovered, etc., etc. But then I had a chat with one of my friends who used to work at Goldman Sachs and now works at CSFB, and he goes, it's really a non-event, because if you think about it, the way it's calculated, it's the change compared to the previous month. So all this tells us, because it's very close to 50. If it was 50, it means that conditions are exactly the same as last month, which, by the way, was a huge drop. So it's a bit like equities. You have a stock going down 50%. If it goes up 5%, it's nowhere near where it was before. But this is what this number is telling us, that it's slightly better than last month, which was disaster. So it's not that things are back to where they were. It's just that they're slightly better than last month, which still means they're pretty shitty. Sorry about the language, but yeah, that's what I was going to say about the number.
So, interesting. I looked at those numbers and I'm like, how is it possible that they registered a PMI at whatever it was, 60?
52. That was my impression immediately as well. I'm like, no way are they back to normal. Well, they're not. They're just slightly better than last month. Okay. Because it's a month-on-month comparison, this index.
Got it. Okay. Well, anyway. All right. Well, that makes a little bit more sense, I guess. I'm going to go with your argument. So Steve, how you doing this morning?
Good. A little bit tired, but good.
Yeah. Well, it's funny how all these days just kind of blur into one another, don't they?
Yeah, very true.
Yeah, I mean, I was talking to, via text to some of my neighbors, and we're like, it's like you wake up every morning and you're like, it's like Groundhog Day in a sense, because you can't really decipher the difference between the weekends and the normal days, other than for us, it's like the FX market stops, and which is a good thing, actually, I think. For most of us, just
Blake, I've arranged that you don't have to pay your mortgage this month.
Oh wow, that'd be really nice.
What do you buy out the bank?
They're letting people have a pass, aren't they?
I don't know. I have no idea.
And don't we get our $1,200 in 3 weeks that we could?
I think certain people will qualify. Certain people will qualify for it. I will not qualify for it. So
yeah.
But I remember when we had President Bush in office during the 2008. I got a check where everybody got a check. This time I'm not going to be getting anything, but you know,
I didn't get a check back then.
whatever. So anyway, well, guys, I want to state this. If today is our last day of, because it's the last day of the month, last day of the quarter, we extended the volatility offer until today. So if you guys want to be part of the ForexAnalytix community, this is the time to do it, because we enacted this because of the extreme volatility we've seen this month. And it's, you know, I've had, like, there's this new trader, there's a bunch of new traders actually in our chat room right now. And here, I'll show you our chat room. You can just, so you guys can see it. And there's a new trader in here, Lake Life, who had said yesterday, this has been the best thing that's, you know, I've found, you know, because we just talk about the markets. It's not, you know, there's no talking about politics or religion or, nobody can sell a product. We don't allow that. We'll kick you out immediately.
The Pope for president.
We don't mess around. So it's just, you know, we joke around, you know, people will joke around, especially when nothing's happening, but we don't bend on the rules as far as, no talking about politics. Well, every once in a while, unless it's Greek politics, we can throw that in there.
Yeah, nobody cares about that.
No one has a problem with that. But we try to keep the political noise down to a minimum. No religious talk. No, nobody can sell products in there. No one can talk about any products. It's just charts and markets and what we're seeing, and that's really the gist of our community. And so, not on top of that community, you got a mobile app. You get the analysis that comes with our product, all of the tools that we have, from your risk management calculator to integrated Twitter to, all, the live stream, updates, and, all of our analysis, whether you're talking about harmonic or Elliott wave or basic technical analysis. So take advantage of it. And also, while you're at it, make sure you visit Forest Park FX. They are our webinar sponsor. They're the reason why we can continue to offer this free webinar. And if you want to be part of the reimbursement program, you can contact them. Their Skype and email address is right here, so you can contact them directly. And I want to thank you for those of you that are supporting ForexAnalytix. I want to thank you. And for those of you that are like, man, I can't do it right now, but I plan to do it in the future, I appreciate that. And we all do, and hope to see you part of this community soon. All right. So with that being said, I'm going to pass it over to my colleague, Steve and Stelios. I got to get to the markets. All right, guys, have a great one. And thanks, Coach.
Hey, buddy.
Thank you, Steve. Thank you, Stelios.
Blake, I have something to show you before you go.
Okay.
This is a gas receipt in Greece. That's the amount you pay. That's how much the gas costs, and that's how much taxes are.
Oh my God.
Yeah.
Can you believe it?
Twice as much.
Because no matter how low gas goes, the vast majority of the expenses taxes, which unfortunately they were smart enough or, harsh enough with us, the vast majority of the taxes on gas are not on the price itself, which means that obviously, they would go down as the price of gas goes down. They are based on the liter.
The liter, yeah.
Yes.
Yeah.
So no matter how low, even if they start giving out gas for zero, we would still be paying multiple times what you guys in the US pay for gas.
Nuts.
Amazing.
I guess that's the reason why you guys don't have 6 and 8 cylinder cars there.
Yeah. Gas
Very
business.
true.
Yeah.
Yeah, very true.
I'm not paying much for gas lately. How about you, Blake? I'm not driving
anywhere.
Yeah,
I'm biking everywhere.
Yeah.
All right, guys.
All right, buddy.
Canadian GDP. Let's have a
Yeah,
look at
I
that.
already brought it up, Stelio. So we'll wait for the data and then.
This is January numbers, January print though. So
yeah, it's backward
it's not
looking,
really
so
gonna do much.
it's not going to do anything. Yeah, but regardless, since
So
yeah,
in line, yeah.
Producer price is lower, GDP as expected, but very backward looking. So I doubt that USD CAD. Let's have a fast look. I doubt that USD CAD is doing much. Having said that, the general formation I see here in USD CAD looks corrective to me, given the fact that we've had like a vertical move higher after breaking through this long-term triangle. I think it's very, very likely that USD CAD is going to be trading higher in the days, weeks ahead. So I do maintain a bullish bias here. So Stel, what else did we have
Yes.
overnight or tomorrow morning or today morning? That
Tomorrow morning we have.
Yeah, tomorrow morning. Can you please guess?
No, apart from the Chinese numbers, we had a couple of statements from the Kremlin about that there's an understanding between Russia and the US that the current oil market situation is not in the interest of both countries. But then they said that there should be consultation on the oil market, but no date has been agreed. So, I've been saying this for a few days now. Oil down here suits nobody except perhaps the Saudis.
The Saudis, yeah, because they're going to run a lot of businesses worldwide out of this market, and then they can have a bigger share.
And although the Russians are saying they have plenty of reserves to last them for years with oil prices here, I don't think they really want to waste that this way. And remember, the Russians were the ones that dissented on the further production cuts from OPEC. So at some point, my belief still remains that I don't know when it's going to be, but it's not going to be too far away from now. The Russians and OPEC and the Americans, maybe, they're all going to get together and form a bigger cartel, basically, and control production. So that's
it's very likely. But yeah, we've said it many times. The downside in crude from here is limited. Now, nobody can be certain how limited is. But even if a potential price drop can end up being rather big in percentage terms, because we're trading at 20 roughly. So even if it goes like briefly to 13, that's, for example, is a huge percentage drop. But so when I say limited, I mean in price, but I mostly mean in time. So I don't care how low we can go, but I think it's going to be for a very short period of time.
Yes. So in other news, obviously coronavirus is still dominating headlines. The rate of infections in Europe seems to be topping out. Obviously, it's a bit early to say, but it seems to be on like a plateau. So hopefully this translates to a move closer to what China saw. So basically, 2 months of
the weather is also going to
cases
help. The question is what happens. The question is what happens following summertime. Do we get a repeat and perhaps even worse than what we currently had? So back in isolation, in social distancing, etc. And I'm saying that not only from the human perspective, which is obvious, but undoubtedly we're talking about extreme damage inflicted to
we're talking about a depression if we have to shut it down for a second time.
Absolutely, no question about it.
Yes. And actually, it's funny you should mention that, because Goldman Sachs they revised the forecast for Q2 US growth to what is annualized minus 34%. And I saw that and I was thinking, wow, finally somebody who actually kind of puts like a right number to it.
A number that makes sense instead of BS. But I remind you that
but then they go and ruin it all by saying that Q3 should be a big bounce back. And I'm like, no way. So,
and to be honest, even if it's a big bounce, how can they be optimistic about it with the data we currently have? You know what I mean? It might be, seems unlikely, but based on what data? With what we currently know, you have no reason to believe that.
They are extrapolating with the effects of SARS and similar outbreaks, which have nothing to do with this one. So
yeah, but I don't remember us locking down whole countries when
Of
we had
course.
SARS. So how
I
can they
agree.
extrapolate based on that?
I agree. I saw a chart this morning. I think did I post it on the chat room? I can't remember. The hotel occupancy rates in Macau, and that was usually like 90%, and it's dropped down to 10 or 12, something like that. It's just disaster for the whole sector, basically.
So
Anyway.
many sectors.
Yeah, well, every
I
sector,
remind you, by
really.
the way, since we were talking about their prediction having to do with Q2 USGDP, I remind you that it's roughly 15 days ago. It might not even be 15 days ago. Mnuchin was saying that the US will actually escape going into a recession, which, I mean,
Yeah,
like,
insane. I mean, it's one thing to try and say something that keeps morale high and doesn't cause people to panic, but that's like completely wrong, completely out of.
I mean, there is
any
no
reality.
upside to that, because you'll either look completely worthless or really stupid. Because if you're about to lie about something that even people that are completely ignorant having to do with an economy can understand that it's going to happen. I mean, what kind of a benefit does that give? I mean, you can say in advance, like, yeah, I mean, we're going to technically go into a recession because of this unexpected like lockdown and effect of the disease, but don't worry about it because it's only going to be temporary and just due to the effects of the virus, for example. I mean, don't say something like we're not going to go into a recession. I mean, this is like it's not even a joke.
Yeah.
Anyhow, let's see how this is going to.
Otherwise we didn't have anything else. Clearly, we're waiting for numbers which are not backward-looking. So really, jobless claims again out of the US this week, and payrolls we have as well. But jobless claims is it's become the big number now, which is very interesting.
Previous print 3.3 million. I mean, was unbelievable, and it is likely that we're going to see, unfortunately, an equally or even worse. I mean, there are many sources from what I've seen that say that they expect perhaps even a worse number this week than.
Why don't we extend our volatility offer until the VIX is either 100 or 20? What do you think, guys? Huh? Think it'd be out there for a while?
It's going to be out there for a while.
You think the 100 would come before the 20?
I don't
can't
know.
be sure about it. I would tell you certainly if we didn't already have central banks literally having thrown trillions and
bombs.
trillions and trillions. I mean, nukes. So if they let it balance on its own, we would probably see that.
100, yeah. Okay, well, just thought I'd make a suggestion.
So, sorry, Dale. You either take advantage of the offer today, or we can't accommodate you.
See, you know what?
So this is your last chance.
Yeah, this is the only place I've gotten to play the good cop. All right. So anyway, go ahead, bad cop. All right.
So having to do with the charts and technical developments, I started today in the, I'll disclose something. We're working on a very nice event. That's going to be up in a month from now. So I was currently working on that. I mean, an event with really, really, really top-notch guests. And, we're going to let you know once everything is in place. We're going to have a 2-day event at the end of April. But, I went in the chat room to say the following thing, which in essence, Blake validated with what he said afterwards. I said that, it looks to me like the dollar wants to move higher from here. And especially if we see risk turn lower, we should definitely see the dollar accelerate higher from here. And, the technical evidence for that we might be about to see the dollar strengthen from here is I was looking, for example, at the Kiwi. So here is the Kiwi's rebound. So far, it looks like a nice pennant. Of course, as always, what I keep saying again and again is, and a single 4-hour candlestick doesn't mean much, right? I mean, I would want to see how we close the day. This is the Aussie. You can see that it's flirting with breaking down from a formation that so far also looks corrective to me. Here is the euro on the 4-hour chart, all of them, right? So here's the euro attempting to break below this ascending channel. So bottom line, I see decent evidence that the dollar might be about to turn higher. And if we have a look at the daily DXY index, there it is, you'll see that we almost tested earlier today. We were a little bit higher. This descending channels trend line resistance, and if we break above it, and in essence, if we break above 100, I think that we're going to move higher from there. So 100 should be resistance from this point on. As I said, I'm also looking at this descending channel, but looking around at the vast majority of the charts, it looks like this dollar sell-off might be about to end here. Now, I need to keep repeating myself. I'm not a dollar bull, right? I'm very, very bearish the dollar, but I still think that in the short term, within the next few days, or even a few weeks, the dollar might keep doing well. Okay. Now, I think the big money will be made being short the dollar later on. So I'm just, telling you what I'm seeing on the chart. I do not intend in general to buy the dollar or chase the dollar higher, in any way. The dollar pair that still holds quite nicely, admittedly, is the pound, because if you have a look at the pound, it doesn't look like anything in comparison to what we saw with the Aussie, the Kiwi, the Euro. In essence, this looks to me like another little consolidation. So I would have to say that probably the cable, even if it is to move lower, it probably wants to do it from a little bit higher from here. Okay, the implications for that, I mean, for the technical picture we see in those pairs that I just mentioned is, first of all, if we go to the euro pound remains under pressure. And, I wouldn't be surprised if we see that, this is not the technical formation that we should be looking for, but probably something like this, which would imply more euro pound weakness, at least towards the 61.8 before higher. But also, if you have a look at the pound Aussie and the pound Kiwi, here they are on the 4-hour chart. So I see a triangle here in the pound Aussie. We're testing the 61.8 of that last move lower, but I have to say that it looks to me like it wants to keep moving higher. And here's the pound Kiwi that has already made the move. I mean, this reversal lower, when we had that huge spike higher, initially looked like it might have been an exhaustive move higher, but the follow through was clearly corrective. I mean, you don't have to be like any kind of technical guru to see that this price action, which was very, very choppy and very overlapping, was clearly corrective. Now, we've since broken through this triangle, and it looks to me like there is more upside here. So pound Aussie, pound Kiwi, look good for more upside. And keep in mind that if we go to risk off conditions once again, which I still consider extremely likely, here is the DAX, for example, that is consolidating below the 38.2. Here is the S&P, which is also consolidating after testing a couple of times the 38.2. Keep in mind that if risk goes off again, which is very likely, pound Aussie and pound Kiwi are the type of pairs that should benefit. We know that, usually Euro Aussie, Euro Kiwi pound Aussie, pound Kiwi, they tend to do well when we're in risk-off environments, because the Aussie and the Kiwi sell off more than the euro and the pound do. Especially usually the euro. I mean, since the eurozone has had zero and negative rates, euro has been used quite a lot, for carry trades, and those are the first ones that unwind, when risk sours. So they should do well, but especially, as I said, pound Aussie and pound Kiwi, they look very nice at the moment. Now, let me go through some of your questions, because the last couple of days we didn't have time to cover many, so I don't want today as well not to. Technical view on Aussie and Kiwi. Okay, we just did this. As I told you, so far this rebound looks corrective to me, and I consider it very likely that if we close below, the equivalent pennants, we're going to see more weakness coming through the market. Also, how do you see USD Swiss in this environment? Yeah, absolutely. USD Swiss remains quite nicely inversely correlated to the Euro USD, as we know. Actually, let me go to the daily chart for this. Euro Swiss has somewhat stabilized, although admittedly it has stabilized near the lows. So as long as the Euro Swiss more or less remains stable, you should expect the USD Swiss to do more or less the exact opposite of what the Euro USD does, which means that if there is indeed more weakness to come from the Euro USD, which seems like it wants to break through that ascending channel, you should expect a higher high here in the USD Swiss, meaning we found resistance at this resistance area and 61.8. Actually, we briefly went above the 61.8. If we found a low here, which Euro USD shows hints that that might have been the case, I wouldn't be surprised to see a higher high from there, at least one higher high from there before we can look for lower prices. Okay, so that's what I think about the USD Swiss. I'm short Aussie against the USD. It looks like a decent position at the moment. I want to wait to see how we close the day to feel even more comfortable about that. Given this month-end volumes and potential for large movements overnight, what is good level? As I said, this is an area that probably you should look for confirmation of if the Aussie is about to continue lower. We had that pennant that I showed, so I think that technical formation should be your confirmation. Question about Nifty and the USD INR. I'm going to cover them in a while. I know you asked for them yesterday as well, but I didn't have the time, so I will cover them today. Question about silver. Now, the silver is still in corrective mode, question mark. Yeah, I mean, might be the case. I wouldn't rule out another leg lower before we actually see a big move higher, because I expect silver to do very, very well in the months ahead. But I wouldn't rule out another move lower first. Now, even if we are to move lower, I have no reason to believe that we can't first move even higher before we do that. So I'm monitoring this ascending channel. You can see it here. If we find support in this ascending channel, we might see another leg to the upside towards the 61.8, which comes at $16, and then lower. So this is the channel, and this is the trend line you should be looking for. More evidence. My medium to long-term thesis remains bullish, so I don't want to be shorting silver just because it might move lower. But as I said, it's not unlikely to see, if we see another leg lower in stocks, which is likely, we might see more liquidation coming through in gold and silver. I will consider that an amazing buying opportunity. Now, gold, still looking quite well. Has tested multiple times this 1585, 1590 area, still holding. I wouldn't be surprised to see even more highs from there. Now, as I said, if risk goes off and we see a big sell-off in the markets, we might see some type of a liquidation. Although, as I've told you, the whole situation with what happens in the physical market tells me that it's extremely dangerous being short any of the metals, because the chances that you're going to wake up one day and find gold and silver being 20% lower are near zero, in my opinion. Nothing is a zero, of course, in the markets, but near zero. But the chances that you're going to wake up one day and find gold and silver 20% higher, they're decent. I mean, it's a 5-10% chance of something like that happening. So, you know, compare what in my mind is near zero with what is like 5-10%, and you understand why I never want to go to sleep being short gold or silver. So in my opinion, this is a market I want to trade only in one direction, and that's up. Okay. Just you know, I'm here. Okay, that's probably your guest, Dale. Peter Campbell is your guest, right? I'm assuming. The interview starts in 10 minutes, Peter. Steve, what's your thoughts on CAD yen? Yeah, let's have a look at it. Euro, Aussie, gold, silver, oil. Now, having to do with oil, I'll go through all the questions, guys. Don't worry about it. Now, having to do with oil, it's attempting to stabilize in this 20 level area. Yesterday, it spiked down to 19. So we actually got my prediction fulfilled. I was expecting teens since some time ago, and we saw teens. Now, is it enough? No idea. I can tell you that even if we see lower prices, it's going to be very, very temporary. So I think that, you know, the next big move in crude is likely to be higher. I'm also monitoring this descending channel. We're flirting with its resistance. I wouldn't be surprised to see a big rebound from here. I mean, even if it's corrective, we can easily see a squeeze. Even if there is more downside, there can easily be a squeeze down, up towards 26 before we can see more weakness. So, as I said more or less about gold and silver, I wouldn't go to sleep being short crude. No way. No way. Okay. So, in my opinion, chasing crude lower, I'm not saying you can't make money, you can, but I think that the risk you're taking is extremely, extremely asymmetrical. Okay. Going through questions to see if we, you know, if there are things we haven't covered. CAD yen, yeah, okay. We can cover CAD yen now since it's also somewhat correlated with this. So this is the CAD yen, and as you notice here, the CAD yen is in essence trapped in this range, right? So we have a range between like 73.86, let's say 74 to make it round, and 78.50. Okay. Against 78.50, and I drew that several days ago, last week actually, against, this is a pivot area in essence. Okay, so against 78.50, makes sense to want to be short. Now, if we go down again towards 74, obviously the risk reward is not going to be in favor of being short. Breaking through 74 definitely opens up a lot more downside. Then we will have to, in essence, fib extend this rebound. And, you know, even if you look at this as a rectangle, we now know that it has a range of roughly, let's say, 450 pips, which means that a break below 73.86 will more or less point to 69.5, roughly, let's say. Okay, so that's what I think about it. We're currently in the middle of this range, as you see. So, you know, me telling you be short or be long exactly in the middle of this rectangle, I think there is no risk reward for you to be either short or long here. I do favor the downside. So if I had to pick a side, I would definitely pick lower. But, you know, no risk reward at the moment, as I said. Diamond bottom in what pair, Sean? Are you talking about the CAD yen that I'm currently looking at or something else? Can prove to be something like that, but if you're talking about the CAD yen, but evidence is Yeah, you know, we need more evidence for me to tell you that. And I think the safest formation you can follow at the moment, as I said, is this rectangle. And it is official. It is, you know, from theory, it is a rectangle at the moment because we've had at least 2 tests of support, at least 2 tests of resistance. So this is 100%, you know, from a technical perspective, a rectangle. Okay, so we should treat it as such. We also had a question, so I don't forget, about the USD INR, and you know, I can actually take advantage of that and show some of the exotics. So USD INR, as we said before, still higher prices, very likely. Now we can see an extension of this, you know, corrective move lower, but I would assume that it's not going to be easy for that to extend lower than 72 before we see higher prices. Okay, so you know, the closer we go to 72, the better the risk reward for higher. And now, having to do with the Nifty that you asked about, Nifty is so far showing just a corrective rebound. I think it's incomplete for the time being. We might need to see another leg higher, but in any case, I don't think it's going to be easy for Nifty to going above, let's say, 9,700. We might stall even closer to that. For example, the 38.2 is at 9,400. I would be looking for a failure and another leg lower, you know, anywhere between there, 9,400 and 9,700. So there are lots of conspiracy theories out there about the virus. Has anyone anticipated an eclipse of the dollar index? Glenn, I've said many times that I don't subscribe to conspiracy theories for the following reason. I think that 2 things are certain about conspiracy theories. One is that some of them are right, but 2, and most importantly, that the vast majority of them are not. So instead of trying to play, you know, the PI and, you know, trying to find around evidence which theory has a higher chance of being right and which not, I just, you know, don't pay attention to them that much, and, you know, do I have to do what I have to do and trade what I have to trade without taking them into account. At least that's the way I approached. We also have a question about Euro Aussie, so I might as well cover Euro Kiwi with it. So here's the Euro Aussie. You know, after this huge reversal lower, I have to admit that the pullback has been rather orderly. We're currently testing this channel trend line support, so I would be a little bit careful here, because especially if risk goes off again, you should expect more upside from here. Okay, so I would be rather careful. I think we might see more upside from here. Euro Kiwi, more or less the same situation. I mean, we've gone through this channel, but I have to say that, you know, this pullback, you know, other than that huge day that we've had, has been orderly, and evidence of that is also the fact that we've had that huge outside day, and every single day that has followed, although we're pulling back, is still confined within the boundaries of this long candlestick. So I think that, you know, we're holding this 50% fib. I think we can see higher prices from here as well. Okay, that's what I think about those. Did we cover USD Swiss? Yes, we did. You can see that the recording, I said that there is likely to be at least one more leg higher before lower. It was Chinese bloke called Hu Flung Lu. Okay. Let me see. Let me same here. 70% is tax. Okay, which country is that, Dominic? I'm assuming you're referring to gas prices. So which country are you from? Gold, I did cover gold. Thoughts on Bitcoin? Yeah, sure. I mean, we have 1 more minute. We can cover Bitcoin and Ethereum. Useless leverage. What's that, coach?
We use this for the interview announcement. And your cat. Your cat.
Yeah. Yeah, my cat is very stubborn. She's very stubborn.
She's saying, come on, Steve, I want to hear the interview.
So Bitcoin and Ethereum, the rebound so far looks corrective in both cases to me, especially Ethereum. It doesn't look that good. Big move lower, probably a corrective pennant that we've already broken through. Bitcoin, a bear flag, most likely. Two more charts that actually show me that it's likely that we go back to risk off, and in that case, you should expect more weakness both from Bitcoin and Ethereum. So, reminding you, you have like something like 18 hours to take advantage of the offer and be with us in the chat room as well and get our analysis and our patterns in play and everything else. Would be nice having you with us. Next offer is probably going to be September. So enjoy the interview, coach.
All right, buddy. Thank you.
See the rest of you in the chat room.
Thank you, Steve Volge. Okay, Peter, getting you set up now, buddy.
Hello.
Peter, welcome back, Peter. How are you, buddy?
I'm good.
Okay, so I don't think you've been here since we had Zoom. There's a share.
No, I was. I was
you
there
were?
the last time.
Okay.
Yeah, it's much better than, but I still don't know how to use Zoom properly.
All right, well, there's a drop-down menu
Yeah.
where you just hover your mouse and you'll see a green box that says share.
Okay, so I'm just going to share screen.
Right.
Peter, are you of Greek origins?
Am I what?
Campbell.
No, actually, that's not really my name. I'm half Italian.
Okay, sorry.
And,
No, I was looking at another Peter in the chat box, which has a Greek last name. Yeah. Campbell is definitely not Greek. Okay.
You know what they
Enjoy the
call?
interview.
You know what they call someone who's half Jewish and half Italian, Peter?
No, I don't.
Jewop.
Well,
I never heard that one, huh? Oh, anyway,
no,
that's
I
the music.
I probably am not allowed to tell that joke. But
All right, anyway,
the
I
other
can do
part of me
anything. This is my
English and-
show. I'm like the Howard Stern of FX, okay? So,
Yeah,
anyway, buddy, go ahead.
The other part of me is English and French. So
Okay.
there you
All right.
go.
Well, you know, before we get started, Peter, I want to acknowledge the last time we were on, there was a lot of negativity, and your euphoria tool that you used was calling for much higher prices and a blow-off type of move in the S&Ps, and that's exactly what happened. Nice call.
Yeah. Well.
How now,
The
brown
funny
cow?
thing is actually I have a discussion which I would like to have here with you guys all about emotion. I had a talk with a good friend of mine yesterday. Come on, load this damn image. It's I'm sorry, this should be loading a high resolution image. I'm just going to go to the Twitter feed.
Okay.
I think it's here, and
We were
so
I
that
was able
looks
to
better.
see it. Okay.
yeah, but that's
right.
clear.
right.
Basically, I use a totally different process for analyzing markets than most people. Basically, I want to discuss this a little bit because I think it's really, really important to understand that markets operate like relationships. And I had a discussion with a good friend of mine yesterday about this and gave him the blow-by-blow process of how markets change their mind and how they change their mind when it's sustainable and how they change their mind when it's not sustainable. And we're in one of those situations right now. And the top was also one in which we were in one of those situations in which I should have been fully shorted at 39 or 38, 33,
33.80. Okay.
Yeah, 33.38. No, I didn't really actually want to be completely short at around 80. because you know, there still seemed to me that there was, if the market had not received exogenous news, it would have been, you know, we would have gone higher and finished the.
Well, I mean, 33 is close enough for government work. I'm sure a lot of people wish they would have seen it there.
Yeah, well, that's the discussion I'm going to have with you guys now,
Okay.
and because it implies with the same conditions with these low, and I really want to sort of get into it. Right now, we have a chart of the Globex Sentiment Index that I posted earlier today. A little bullish excess energy here at this low, which may very well, since other charts have completed some emotional activity, may be a decent bounce to 2620 or 2610, and then form a right shoulder with a slanted neckline. And those happen a lot in bear markets, and they're very nasty when they do. I don't like the normal head and shoulders patterns, but when you get a good slanted neckline,
Interesting.
they can turn into something. So I always prefer to be aware of them than unaware of them. But back to the most important subject here, which is markets being like relationships. I would like everybody to consider something, which is that essentially when you have had a fundamental difference with somebody, and especially somebody you care about and you're interested in, and whose opinions matter to you. So you now have like someone, a family member or wife or husband or whatever it is, girlfriend, boyfriend, and let's just give the example that I discussed with my friend yesterday, which was, let's say that you have children and one person thinks homeschooling, the other person doesn't think homeschooling. What ends up happening is that you have a nasty argument about this because the one person is very motivated about it and the other person thinks it's absolutely the worst thing ever. And that argument turns into festering other kind of stresses that might be in the relationship. So the argument becomes...
You mean like resentment?
What?
It turns into resentment.
Turns into, yeah, resentment. It turns into a large conflict. So I use this concept called an X-tick. An X-tick is very similar to one of these arguments. So I would like you to imagine in your life when
I don't have to imagine it.
Okay,
Do you?
well, that's good.
Most people have experienced it.
Yeah, and so whenever you have one of these very big fundamental differences with somebody you care about, or you need to care about, or you want to care about, resolving those differences doesn't happen in a single argument. Let me give you an example. So somebody's wife thinks that kids should be homeschooled, and her spouse doesn't think so, and they have some stresses in their relationship for other reasons probably. They have this big argument. Now, what's the chances that that can be resolved in 15 minutes or a day even, where the husband comes back and says, "Oh, honey, you're completely right. I'm just, let's go on vacation. I'm really sorry about arguing with you." That would mean that his view would have to have totally changed without any real consideration for the fact that he held his view strongly before that homeschooling was not the right place for his children. So the way that he's going to change his mind, or the way that she's going to change her mind, is by having another couple arguments. And so the emotions of changing your mind and finally saying, "Yes, I'm sorry, I was wrong, I agree with you," takes a few emotionally charged arguments usually to get things straightened out. It's hard to change your mind about beliefs you hold strongly. And so the markets are very similar. When you get an X-tick in my world, that is an argument. It's an argument between buyers and sellers who hold their beliefs very strongly. And a single X-tick that holds prices, contains prices, is a very powerful event and suggests something about one person or another. I'm sorry, there's a little noise in the background because I'm on the balcony. I'm sorry. But if you have a X-tick, a buyer X-tick, where it holds prices back and then sends prices back down, then we have a clear winner to that argument. But what I'm interested in is when people's minds are changing. If the overall trend is down, then I'm interested in what happens at buy emotions that are charged in the buy direction. And so can we break out over those? And when you break out over a buyer X tick, it's as if somebody started to recognize that they hold strong beliefs, but they might be wrong. And so then you have a second buyer X tick, and then at a certain price, and then they say that breaks out. Now, the market as a consensus, if you look at it as a relationship, if you look at it as a person, has the same reaction. Now it breaks out, and you're starting to say, maybe I should think about this a little more seriously. After 3 or 4 of those kinds of confrontations, the market can sustainably change its mind. Now, why is this important in the market presently? The reason it's important in the market presently is that off these lows to the tune of what is now about let's see, what is it, 300, 400 points on the S&P, basically. We are dealing with a single X ticket, 2347, that broke out. And since then, all of the emotions that I look at are very contained. So they are not emotions that are symbolic of an argument. They're emotions of people trying to avoid making a decision, not confronting a decision, not being forced to face it. So what we need in order to make a bottom in a market is we need to get 3 or 4 X ticks that break out, and then you see that the people can sustainably change their mind, and they're willing to have commitment and conviction about that. Now this happened at the highs, and so we had, I remember it vividly because I count them. I have this rule that you have to have 3 X ticks at 3 X ticks regime changes in the market. 3 X ticks that break down, 3 X ticks that break out.
Why 3?
Because if you just look at the relationship you have with somebody you care about, it's the exact same thing. You don't resolve your differences in a single confrontation about them.
Yeah, but why not 4? Why not 2? Why 3?
Well, 2 is not enough. 3 is generally enough, but in a very, very, very strong emotion situation, you generally need more. So in a situation like this market, you might need 4. But, the way it works is that...
Well, I think 3 is a number of completion. That's why I was asking.
Yeah, yeah. Okay. And 3 is my company name. My intellectual property company is called M3 for a reason, because 3 is the most important number there is. And it was for me in music as well. As a composer, 3 was the constant relationship around.
Sexually, it was for me. Go ahead, buddy. Sorry. I couldn't help myself. Go ahead.
But anyway, so the point is right now we have, at the highs, we had seller X tick at 33.65, 33.39, another one at 33.39, and one at 33.30. I had made the mistake on my piece of paper writing down those 3 prices, X tick prices, and there were 2 that occurred at 39, so I didn't really count them as 2 distinct emotional arguments. And the pivotal price for me was underneath 33.30, at which point the regime in the market would change. And then if you recall, what was happening is that 33.30 should have been defended, and that could have become a decent rally, which would have retested the highs either as a higher low or a higher high. But once 33.30 was broken down, then that someone had capitulated, and the argument was over. The argument was over, and the regime would have changed. I'm going quiet here. And basically, so what ended up happening there is that we ended up with a 120-point gap down underneath 33.30, and there the regime changed. And usually, a regime change is pretty you get tradable bounces in it, and this was one of the first ones where you didn't. And I suspect that when we get regime change off of a sustainable low, that it'll be similar. So I'm going to show you a chart in which I discuss that, and that's going to be on this next slide here. Let's see, where is it? Here. So I did a ball throw, gravity, and bounce energy dissipation within a broadening pattern example using a real world kind of physics approach to things. So I created this chart showing a chart which I have been posting for a very long time. If anybody knows me, you know that I have been posting since the spring of last year, and probably before that, that it was my impression that we would see a throwover of the broadening pattern. Sorry about the messages there.
Which is what happened. Which is what happened up there. You know, you call it broadening. Some people call it a megaphone.
Yeah, or megaphone.
Yeah.
So my impression was that we would see a throwover that would be to 3,300, maybe to 3,500, 3,550, and then that would roll down. Now, what ended up happening is that this whole thing translated very, very, very far. And I actually thought it was impossible to complete that accelerated downtrend line in that time frame. But I don't. This is the patterns are so strong. The only thing that was happening in this pattern, if you look at my charts that I posted, was that we were missing, and I don't know if you can see, no, I can't click. We were missing a wave in our real live market scenario. And that was that from 1 to 2 in our live market scenario, we didn't have a zigzag. So we were missing that wave, and that wave then became the throwover, which is why I thought that was going to happen. And then it still means that down here at wave 15 and 16, we should complete them at about the same time as what they would normally be in an ideal pattern. So what I think is a very likely scenario is that we get down, finish this pattern, and then all of the emotions in the market get tested very, very strongly. All of this liquidity and fake money being created, all of these stimulus programs by the government, basically bribing businesses with forgivable loans and all sorts of other tax incentives, et cetera. And the checks that are sent to people will ultimately be spent in the economy. Whether they are up to doing anything productive or not, I don't know. What I do think is that it's not, that we will see inflation from this because the central banks always overdo it. And if anybody thinks that this whole virus situation, in my opinion, is the driver for this problem, I really think that that if you look back at how capitalism is supposed to work, capitalism is about capital. So what you're supposed to have is capital. What we have is called creditism. And so it's not capital, it's credit. And in the old days, many times there were wars that went on for 20 years or 5 years or whatever, and companies had to survive these things. So what did they do? They saved money. They couldn't go and
get bailed out,
bring in money from somewhere.
Yeah.
And there's companies all over Europe that are 500 years old that survived many wars. My point is that we are what's happening is that we have an economic situation that's being created by a credit dysfunction in a way that is magnifying this whole process. And that's sort of, when you look at these broadening patterns, I want to remind you that this is a deleveraging pattern. So it is a pattern that exists when there's too much leverage, and it's a way of getting rid of that leverage. And these are not accidental patterns, in my opinion. This chart is a chart of the historical X-ticks that have occurred throughout history. Now, if the market had not moved basically 1,200 points in the matter of a few weeks, this chart wouldn't look cluttered at all. in fact, what you can see is if we zoom in here, the market goes between these X-tick levels, these emotional prices, very directly. Like, for example, if you look at this light here, I'm in the lower right-hand corner. If you look at this line at the bottom where the market bounced, that line has been there for years. So this is an emotional outburst.
Lost you. Is it me? Is it me, guys, or you? It's not me. You can hear me, right, Sinatra? Ryan? Peter is gone. Okay. What a great presentation. Okay. Let's see if he has anything on Twitter. She sent me a message.
I'm back.
Oh, good. Okay. Where'd you go? Bathroom break? Oh, no, I'm sorry.
Yeah, so I am sharing screen.
Okay.
Back.
I was just lamenting. So, Peter, you talked about it should happen at the same time. You have, so you must have a feel for, you know, you talked about it being an argument and, you know, the way we gap lower. Looks like it was a divorce. Okay, so that argument ended up in divorce. You know, arguments and you can reconcile, da 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 da. But that a gap to me said it was, you know, a pretty big argument. It was.
It was a very big argument.
Maybe the last one. So and then you were talking about it should happen around in the same time, around the same time. You have a kind of a feel for price and time. Do you have a time zone?
Lucas timing is a very important part of my work. I don't, you know, I tend to do things in zones. So, for example, I like to look at the markets and say, okay, where do I need to be extra alert? Where do I need to be extra concerned and aware of things that I might ordinarily not focus on? So, you know, one of the problems that happens in bull markets and bear markets is that people are very focused in the direction that the market has been going on and extrapolate that forward.
Right.
I'm going to go to the Lucas timing chart in a second, but this essentially complies with the Lucas timing process here. I created this chart with respect to that. Basically, you know, we're looking for a high. Essentially, it was around the 27th or Monday acceptable. Approximately, and then down into the next week into April. And what I see is, you know, if you were following my post at mcmct.com, mcmct on Twitter, or on mcmct_markets, which is the new feed, then you'll know that when we came down here, I have been harping on this particular top of this emotional zone as a high probability that we would find support there. Now, I wasn't sure whether that support would end up being in the form of a 200 or 300 point bounce and then roll over, or whether it would be a higher one to support to test the previous resistance levels. But this is where this is a helpful process, because you know that there's a lot of committed emotion in these areas. And, you know, if you have an argument with somebody and you walk by the place you had that argument and it was a heated argument, you remember it. That place is changed. So it's the same in the market. When you have heated arguments in places, for market participants, those places change, and they change for a very long time. That's why I have this chart. And let's see, just to cover the other side of the argument, I would expect one way or the other that if we get down to our target range, which this cut off the prices on the right, I don't know why, this would be around 1850 to 1950, then we don't have to have a trampoline effect. The problem with our situation in the markets right now is that it's not certain that all this credit creation is actually going to do anything. is it going to be effective? Is it going to go in the right places? And is there going to be so much inflation created that effectively it's not really stimulating anything? And in fact, we end up with stagflation. So depending on the strength of that stagflation is going to be potentially the psychology behind this bounce. And so we might see a bounce that follows the normal gravity without the trampoline. So if you look at this chart over here, what you see is that I have a trampoline. Trampoline is basically all of this insanity being created by the governments and central banks around the world, by, mind you, at a very delayed pace, because
well, it takes time. I mean, there's always a lag in monetary policy. I mean, you know, people were talking about the market being vulnerable and the repo market having problems because the effects of QT from the year before had not worn off yet.
Yes, exactly. And
okay, so go ahead, buddy.
So this scenario would presume that all these monetary machinations are not very effective, in terms of that there's other things that happen that sort of counter them. And that would create a more gravity-oriented reaction to this next bounce, which would probably be up around the 3,000 area when it does happen. That would be a blistering rally if you consider that we end up probably in the 1900s to 2000 area. Right. But anyway, let's talk about Lucas timing. I'm going to go find that chart. This is going to take me a little bit here. Let's see, actually, I'm going to search for it.
What do you call those points again, Peter? You call them X points? What they call them? X ticks. Okay. Got it.
That's weird. It doesn't search in my private channel. Okay, but here it is. Anyway, this is another interesting point. Lucas timing to me is extremely powerful because it's subjective. And it doesn't mean that the market can't accelerate out of Lucas timing, but the point about that is that if you look down the bottom here, we have these little yellow dots. Those are the Lucas timing, and then we have subordinate yellow dots, which are a more minute Lucas timing, and then we have these vertical lines, which indicate where there is a predisposition for the market to do something. In terms of time. Now on this chart, I noted that this is a wall up here at around 2714 in terms of geometric resistance. The emotional resistance is slightly higher than that. It's a 2750 starts. And basically what you see here, interestingly, is that we had Lucas timing for a low over here. And what I discovered in my work, because there's two patterns that I watch. Bearish and bullish running corrections. Those are I'm completely, you just don't want to screw those up. And if you're wrong, it's manageable. If it's something turns out not to be a bullish running correction or not to be a bearish running correction, it's still completely manageable. But if you decide to go long on a bearish running correction, it's a disaster. And that happened here. In these markets. So we ended up with a situation where the market generated a very large bearish running correction around the 3150 area. So that started it. That began the running correction. It was confirmed at 3050. So, and I posted all those things and sadly posted that it was, that at the best likelihood it was going to turn into a 2800 test, but running corrections are often, essentially this running correction is about 170 points in size, 160 points in size. So it's very often that they achieve 300% of the measurement of the running correction. The other pattern that I watch very closely is the expanded flat, because I don't like Elliott wave, and I don't say that I disrespect Elliott wave people. There's some people who do it very well. I have respect for a few of them. Puff Dragon is one of them. There's also a couple others. who are great. Jason Haver is another one who's great, and you can look him up. He does great work. But expanded flats are the death of Elliott waivers, and they also tend to kill, like running correction, they tend to kill indicators. So indicators get the wrong readings around expanded flats. And let me explain what this means. I got to go turn this off. I'm sorry. Where is this? It's driving me nuts.
What, people trying to get a hold of you?
Yeah.
Yeah. Okay.
So, there. Basically,
they want to have an argument.
Yeah, they do.
Go ahead.
You're perceptive. No, it's actually developers working on something, and they're messaging like crazy, so it's not gonna be going on like crazy. So going on for a while. Basically, the problem with expanded, what I found is that our 5 waves down, there's two things. C waves are much more powerful, have the potential to be much more powerful than impulses in 3 wave. So I'm not a big Elliott wave person, but I'm just telling you my experiences, and my experiences are a little bit unorthodox because I tend to think that the market moves mostly in 3s, moves mostly as 3 waves, and it moves mostly in ABCs where the fifth, the C wave is composed of 5 waves. This is the basic structure that I look for all over the place. Okay. So if you count the market move down from the highs, what you see is that we have achieved 5 waves into this Lucas timing right here for what is looking like, to me, a C wave down that we are putting in, which is probably going to take us to the 1850 area. Okay. So on this first leg of this wave, we have 5 waves down, and the A wave in an expanded flat acts like people expect it does. What happens is that the B wave doesn't. The B wave should have been right here, like at this red line, and given people a higher low, and then given people this C up here where people could balance out their positions. What screws people up is when the B wave actually drops below the low of A.
Irregular.
And then it's an irregular flat. Yeah. And that's what I think we have now. And
that's why people are stocking up on toilet paper, because of all the irregular formations here. Exactly. Peter, I think I've done a pretty good stand-up routine, and you amazed me again today with this presentation. Really, your work is, you're like a mad scientist, my trading.
Yeah, I don't know about that, but
no, really, and I have mentees that follow your stuff, so I've seen it. You're good. Yeah. How can people follow you? Is it strictly on Twitter, or do you have anything else going on?
Well, let me just finish this because we're almost done with this, and then we'll skip to that. Basically, this is the Lucas timing coming up right around April 7th, plus or minus a day.
Write it down.
The normal period, the normal activity for that could be a retest of the lows. It could be, in fact, that the market could extend higher. We could have an acceleration from this timing right now. That's the 27th to 29th, which you can see at the bottom of your screen. That could turn into a point that's acceleration. I don't think that's happening. And I do think that we should see a low somewhere between 2150 and 1950 into the next timing. Okay. Or
when's Easter? When's Easter, Peter?
Around my birthday. So
what is it? April what? What's the number on it?
I'm not sure. I think it's close to the 12th, though.
Okay, so the market's going to have a resurrection around Easter. So okay. What a great interview, buddy.
So anyway, if people want to follow follow us, because it's a team here. I wrote all the stuff, code here, but we have a team. MCM Market Stream is private, and you have to actually subscribe to get that. And if you're not a member, then you'll see the subscription options on the page. Then MCMCT is, let me just get back there. MCMCT is the public stream. And I used to post completely on there for years all of the same stuff that I'm posting on MCMCT markets. The problem is it's distracting to deal with a bunch of idiots publicly, and it's a lot of work to do it. So the data that I make, I believe, is unique and very valuable. I'll show you just what we did
I'd like to know while you're wrapping up, what's your view on this pandemic? How long you think it's going to go? Do you think this body blow to the economy is kind of fatal? So I'm wondering what your thoughts are.
Well, I don't. If you want my opinion on what I think is going to happen, I think we're going to get the trampoline effect here. That's my bias. I think we're going to go down into the 1850 to 1950 area and get the trampoline effect.
Because we'll be getting better news because the curve is flattening out. I mean, they are going to be related, aren't they? Because
the dream of Marxists everywhere, which central bankers are Marxists.
Okay, here we go. All right.
They're not anything to do with capitalism. Their whole goal is to undermine capitalism, to create crony capitalism that sustains this sort of ideal of, I'm going to show you this. This is my go-to post, which you guys should bookmark. Read that while I'm talking here. So this is what central bankers do. So one of the things that they are going to do to make sure that all the assets are on the bank balance sheets that people lose, and that they get people chasing wildly, as in the bottom of this, a process of wealth degenerating into a gamble and a lottery, in my opinion, means that we probably get the trampoline effect and get to a new high. But then the results of that are likely to be terrible. Although I think it's possible that they might be able to save the system. These guys are unbelievable in their persistence.
Do you think they want to save the system? Or start a new one?
As long as they are increasing their power, yeah. And central bankers, in my opinion, are, they have a particular goal. And their goal is to consolidate the power of the banking system. And to move power from the private capital into credit and banking.
They're mission accomplished.
Yeah. And so so I think that if you ask me my opinion, I think that the way they probably end up doing this is by just hitting that Command P button as much as they can possibly hit to generate perception that furthers their longer term agenda, which is not capitalism. And so I'm emphatic about this. I post this all the time because central banking is about taking the power away from the people. If people wanted people to be powerful, they would give them capital. And capital stores your life energy. Capital stores the investments of all your learning. But the whole goal of our financial system the world over, and especially emanating from China, which is the de facto mechanism to implement the most extreme monetary policy ever, and express that in the world. And believe it or not, it's not being done by China directly. It's being done by other central banks who have given China the collateral to do it. So the PBOC really directly reports the United States dollar. And you can say whatever you want, but that's how this works. And so all this crazy monetary policy in China and Japan are under the direct supervision of the Federal Reserve and the World Bank and the Bank of International Settlements. Yeah. None of these things are happening by accident.
Right.
So, and they're all designed to undermine capital.
Confiscate.
So that means, confiscate and to remove your ability to have a happy life without stress. Everybody will have
mission accomplished again. Yeah. Anyway,
so,
so Yeah, go ahead.
So anyway, you can follow me at MCM Markets, and you can follow me at MCM_CT, and then the website is mcm-ct.com. On a discussion of timing, I'm going to just go back to this chart. This is the idealized pattern. Okay. Now I don't know if we will continue to track this pattern, but I have to tell you, since I have not changed a line on this chart. I can go show you the posts I did last year, which all suggested that that a throwover would complete somewhere in December to February this year. And then when we started to get into February, it looked like they were even translating it further. But the end of this pattern comes in around May. So what it looks like to me is we'd probably get through the worst of this probably into April or May.
Okay.
Sometime.
All right.
And maybe early June. So, but I'd say May. If you asked me to put a number on it, I'd say middle of May.
Thank you so much, my trading warrior brother. Great
Hey,
presentation,
it's great
bud.
to catch up with you. Okay.
Yeah, really. And so there's Peter. I'm telling you, I want to bring the best people in, and here's an example of it. So Peter,
well, Dale, you're a great person. I really appreciate knowing you and having you being part of our project as well. I think you use TIC tools, so you know what it does. So.
Yeah, and thank you for your contribution and for all the help you give people, Peter. And really, my hope is that you and the people you care about, instead of having arguments, remain untouched by this virus. And you and I are brothers, so we can argue and still be brothers. We can argue about the market and still be brothers, man.
100%. And I want to just comment to people who are doing well in the stock markets. Please consider the people who aren't doing so well right now and are probably having difficulty getting signed up for all the stuff that they need to help them. If you can give them bigger tips or help people who are suffering right now, I think just the thought means more than the reality of whatever you do. So. Okay,
buddy.
Okay.
That's a good seed to sow for everyone. We all reap what we sow. So
Exactly.
that's a wrap, everyone. So don't just count your pips and your emotional X-ticks. Count your blessings. And I'll see everyone tomorrow. Adios.
Great.
Thank you, Peter.
Thank you.